Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for WealthPress. Today is actually a Tuesday, the 13th of April. I was out yesterday. I was traveling. I'm actually at the Bahamas. I'm in a hotel here, so I'm not in my regular operation, but bear with me. We'll get through this. I'll get you everything you need to know to get the day going the right way. Now, yesterday we didn't really have a lot of Fed data. Today we have the CPI and we have the Small Business Optimism Index. And tomorrow we have Jerome Powell speaking. We've got import and exports. And then Thursday, man, oh man, Thursday and Friday we've got big days. I'm actually expecting some movement in the bond market, which has been really, really stagnant over the last few weeks, but I'm expecting a break. Let me just show you this while we're on the conversation so you can see what I'm talking about. I mean, this thing has been just sitting doing nothing, and it's impacting the stock market because stock market gets a lot of a direction from the bond market. As you can see here, the bond market's been really just kind of doing nothing. And if you look at the SPY, you will see that the SPY, although it's been going a little bit higher, it's not really doing all that much. This trading action the last 5 days, look at this. It's pitiful, pitiful. So we're going to have a lot of data on Thursday and Friday that's going to possibly give us a break. The big report is going to be obviously jobless claims. I'm waiting patiently for the number to hit below 700,000. I'm hoping it's going to be below 700,000. Lately, the expectations have been moving down below. They've been teasing us, and then they've been moving up. They've been teasing us, and then they've been moving up. So hopefully, finally, I'm expecting the market to go below 700,000. The consensus is 695,000, and I'm hoping we're going to hit that number. Now, as far as global data is concerned, let's talk a little bit about that right now. Chinese reported its exports rose 31% in March, in line with expectations, but weaker than the 60% growth seen in the first 2 months of the year. I don't know what they're doing in China, but they're going crazy. The rising trading activity reflects high demand in overseas markets, even as some countries restore precautions to counter rising COVID infections, like Japan, for example. Japan is not doing really, really well. Apart from the Chinese trade data, Asian markets, like others, will be on the tenterhooks pending the release of important March inflation figures. That's going to be really, really big. We've got banks. Banks are going to be releasing over the next few days. We're starting with JP Morgan and Wells Fargo, and then we've got Bank of America and Citigroup. Chase and Wells Fargo is tomorrow. Bank of America and Citigroup is on Thursday. Keep your eye on the financial sector and on interest rates. Worries remain about recent surge in COVID, including Brazil, Michigan states in U.S. Earlier this week, Japan, this is what I was talking about, which trails the world in the vaccine rollout, I think vaccine in Canada, called for government-backed measures to curb the recent surge in the sickness in some areas. So they're not really doing well. In Thailand, authorities are warning of potential explosion in cases after many new infections were found among people who frequent clubs and other entertainment venues. So folks, we are not out of this just yet, but we've got to keep our eye on the stock market. And as I've mentioned here, if you look at the S&P 500, it's still way overbought. Look at this RSI level. It's at 78, and we're still seeing real strong divergence. And if you look at the NASDAQ, you will see the exact same thing. You will not see anything really that different on the NASDAQ 100. You will see that it's reaching new highs, and you will see that the RSI is overbought. The divergence is not as bad, though, because we had this break, and that's giving us a little more stability in terms of elasticity in price. But I do believe the NASDAQ will come off, too. It is going higher, mostly because of semiconductors, not because of FANG stocks. If you look at stocks like Amazon, which were the darlings of 2020, 2019, you will see that the stock hasn't necessarily been doing all that great. It still hasn't taken out that September 2nd high that I've been talking about, well, since September. Now, I've got 2 stocks to talk about with you. I've got a meeting, so I'm going to give a couple of more videos later on and give you a full update, but I wanted to get you guys started with the day, kind of give you an update of what's going on and show you a couple of stocks that I'm targeting right now. First stock, General Dynamics. What does this company do, you may ask? Well, let's look at the profile. I'm very narrow right now in my defensive, industrial. I like basic materials. I like industrial. I'm not big on technology right now. This stock has given us 31% over the last year, and it looks like it's turning around. Industrial stocks are the place to be right now, by the way. And as you can see here, it's near swing highs right now. It pulled back for a few days, and now it looks like it's going to go higher again. I like this stock. Next stock, travel stock, Wyndham Hotels and Resorts. Now, I know Japan, Thailand are not doing well, but some countries are actually doing really, really well, like China. US is recovering right now. Things are looking better. And look at this stock. This is a darling. It's reaching swing highs. It's been on a tear. And I mean on a tear. Wyndham, one of the biggest resorts, hotels. I'm in Bahamas right now. I just went through the airports. Folks, they are packed. I was in Charlotte, North Carolina. The airport was packed. On the Jacksonville airport, packed. Packed. So people are getting out and traveling once again. Now, Wyndham Hotels and General Dynamics. Those are the two stocks that I'm focused on today. Now, before I let you go, I've got something important, something crucial. Very few people know this, but Wall Street has been telling everyday folks outright lies for decades. And I'm gonna stop this. Never giving away the real edge in it, as over everyone else are revealing it's beaten the stock market year after year. But finally, I'm exposing the truth. That's right. I'm revealing one trading strategy that I've been using to beat Wall Street for nearly 10 years straight, and how everyday traders can turn this Wall Street trick against them and profit. It's all tied back to these hidden 14-day windows where certain stocks tend to explode. Now, stop getting stuck on the wrong side of the trade. Click on the link below and learn about this little-known strategy today. And make sure to like this video, subscribe to this channel if you're watching on YouTube, and post some feedback for me. That's right. I'm finally revealing the truth. This strategy has beaten the stock market consistently for years. So again, Wall Street, they always talk, but they never give away the real edge. Now I'm going to give it to you. Follow the link below, learn about these 14-day windows. You've got to learn about these. I've been using these things for over a decade. The numbers are consistent. It outperforms the market, reduces risk. Follow the link below. Learn all about these 14-day windows now, and have a great day. Bye, guys.